Deal or no deal? There's never been so many deals happening between Iran and the US at the same time. It dominated most of the price action this week. And whenever you get surprises or news breaking out, you can get big bars. Here on the chart on Thursday, we had big bars. Bar 47 opened out of nothing in a small trading range and just rallied from 72.80 into 73.40, and it's a surprise. Now, whenever you see these things, beginner traders will always go online and find out what the news is. They have a urge to explain the bar, something that's different than everything to the left. Experienced traders never do that. Experienced traders know that something is happening, but it doesn't matter what is happening. What is happening is very clear. We're going up, right? And a bear in a trading range sells above this high, sells above that high, sells above that high, this high, and every bear sees the close of 47 and thinks, uh-oh, this is a change in character. The market is doing something different than it has been doing for the last 6 hours. And what is that bear going to do? That bear is not going to say, oh, let's see what the next 6 bars are going to look like. Maybe I'll get out of this. No, that bear is going to say, bam, I need to exit. And what do bears need to do to exit a short position? They need to buy. What are the bulls going to do when they see this bar? Well, some bulls are in, right? They're long since 46 or something, and they think, oh, this is great. This is going to go higher. But most bulls will be flat, right? Because they have been buying for scalps and fast turnarounds. So a lot of bulls will enter and they will buy. So there's double buying pressure at the close of 47. Bears buy to get out of a position, bulls buy to get into a position, and everybody's looking for a measured move up. Doesn't matter which line you use, all of them will be reached on such a powerful breakout. You can use the high and the low of the day, the measured move is around here. You can use the high and the low of the total trading range, even from this high on Wednesday, and the measured move is around here. We reached it on Friday. But whenever you see news bars or bars influenced by news, you always have to remember that the price action doesn't change. It accelerates, right? Maybe otherwise it would have gone up slower. Maybe otherwise we would have stayed in a trading range on Thursday and broke out on Friday. This is an acceleration of normal price action. Bars like this can happen anytime. Not all of them are news related. It does not matter what the news is. In fact, whenever you go and find out what the news is, your read of the price is going to be influenced by your opinion about the news. You might think that you agree with the news. You might think that you not agree with the news. You might think it's bad news, it's good news. You're going to have an opinion about the news. And if you don't know what the news is, you just see a giant bull bar, you know we're probably going up for a couple of legs and some type of a measured move. So, moral of the story, don't look at news. News is something for networks and TV to explain why price is moving, but intraday traders look at price and they see a big bull bar and they just buy. Last week, we had, of course, the big bear bar on the daily and weekly chart, and I said we're probably not going all that much lower. I think we're going to open the week around in this bar, and we might even go here, but I don't expect it. Well, we did go there on a good second leg down on Tuesday. So the sell-off on Tuesday was basically a second leg down from the sell-off on Friday. We did reach that magnet that I had as a possibility from last week's video, and we bounced. We had a bounce on Monday, so the follow-through on this bear bar is a bull bar. We had another reversal on Tuesday with bad follow-through, and then we had Thursday and Friday. On the regular trading hours chart, so that is the chart only measuring 9:30 Eastern to 4 p.m., you had an inside bar follow-through. That is that second leg down with the big rally into the close of Tuesday. And then you had another inside bar Wednesday and then a bull bar Thursday and follow through Friday. And inside bars are magnets. They are trading range bars. They are triangles as well. And if you're in the trading range, you want to sell above and you want to buy below. So in an inside bar, a bear sells above the inside bar and a bull buys below an inside bar. The target for a bear selling above the inside bar is the low of the inside bar. And the target for a bull buying below an inside bar is the high of the inside bar. And you can see that both scenarios this week played out. You had an inside bar that bears could sell above, reaching the low, and you had an inside bar where bulls could buy below, reaching the high. When you look at other inside bars on the daily chart, you can see the same. Here you have an inside bar, a bear sells below, a bear sells above, the target is the low. Here you might have an inside bar, and it never triggered below, but when we did trigger below, much later, we immediately reversed up. So these inside bars are magnets and they are traded in the opposite direction. And a bear who sells above and scales in is probably going to make money, just like a bull who buys below and scales in is probably going to make money as well. Whenever you therefore see an inside bar on the daily chart, there's an increased chance that the next day is going to have it's going to be an outside up day or an outside down day. And we had both cases this week on the S&P. So what now? Well, we have our leg down, we have our second leg down, we have our third leg down. Let's take a look at this chart. It's easier to read. We have 3 legs down. The first leg is much smaller than the second leg, and the third leg makes me think that we might have a small third leg down. And we're back in this range. We are seeing a gap open to here, and there's a gap open here. At this point, if we do get a third leg down, because we're more bearish than expected, we might come and close the gap. Did we reach that low? 23.75 and 32.25. We did not reach that low. This is a second entry long. That was the first entry long. We did not have a first entry long above here, so bull who bought above here can buy more above here, probably get out. It looks to me like the chart is going sideways, and sideways roughly between 74.50 and 72.50. To get more clarity, we can look at the weekly chart. And the weekly chart has an enormous climactic run up and a second leg trap. We fell below the second leg trap on this week, not last week. Last week failed to fall below that higher low. But this week, of course, managed to get below that higher low. And instead of big follow through, we rallied from the moving average on the weekly chart. This is a bad high one, but it's probably going to trigger. We're probably going to get the all-time high and the measured move up from the breakout, 77.13.75. If we do break below last week's high, I think there will be bulls buying it, but like a trading range. And that means that when we go above last week's high, we'll probably dip at least a third back down from last week's range, maybe even 50%, maybe even 66%. But when we trigger last week's high, maybe on Monday, maybe on Tuesday, I would want to see the pullback, and I would want to see 33 or 50% pullback before we'll go much higher. We're probably still looking at the new all-time high and this measured move. This was such a strong bear breakout, and it failed in a V reversal. That sets the ingredients for a measured move up to 77.13.75. Now, I'm still on the June contract. This week, we're going to move to the September contract. And that means that all of these numbers will shift, right? Because the new contract is on a higher number. All of the numbers will shift about 50 points to the upside. So in next week's video, you'll see the new numbers. So we're probably going to trigger above last week's high, above this bull bar. We're probably going higher, sell off, and get deep pullbacks also on the weekly chart, because the weekly chart is already in the trading range, but this is the low of the trading range, and I'm expecting the high of the trading range to be close to 8,000 on the weekly chart. That means that we're probably going to target on the daily chart this high. That is last week's high. And we have 2 bull bars. We might get a third bull bar on Monday, but then I would not be surprised to see a 50% pullback. A 50% pullback from last week's high to last week's low is back into this band that we have tested a couple of times, failed to break out below, and then immediately reversed up. But there are still buyers and sellers happy to get back into this area. So 73.50 to 73.75 is a magnet for bulls and bears. This will be some resistance as well. The average price, I think we're going to go higher, go lower, a couple of bars sideways, and ultimately go higher and test this breakout point, which is at 75.0575. A bull on the daily chart can buy this, but I think he wants to buy more lower. And because it's a trading range, a bull who buys above this bar is not going to buy on a full position. He's probably going to buy on a small position, like half, and then add on the pullback. And the target is, on the weekly chart, the all-time high. 60-minute chart for during the week. We were in a broad bear channel since the open on Monday. The marked area is the overnight price action, and the white colored background area is the regular trading hours. So we were in a broad bear channel, and we sold off in multiple legs, and now we're breaking above that bear channel. That puts the market not in a bull trend, that puts the market more likely in a trading range. That high is a magnet, and that high is 74.7225. It is 75.35 on the September contract. That is the immediate target for Monday. But then there's breakup points. There's a lot of sideways here. You can see we made a lower low and we made a higher high. So we're effectively in a triangle on Friday. Probably will find bears as we go up and be a much of a trading range for the upcoming week. Then let's take a look at the DAX. So on the DAX, we had a target here, the low of May 21. And I said on Monday, we're probably going to reach it and then bounce from reaching it. This is the Monday bar on the daily chart. Can zoom in a little bit. And it rallied in the morning and it sold off in the afternoon, making it a bear bar, but still a bounce from the May 21 low. Big gap on Monday, and we rallied directly from that price that I was looking for. But then on Tuesday, we decided to come back down for another test. Now we're back into the lower third of this trading range. We had buyers above that bar. We had buyers above that bar. The stop above that bar triggered. And now we have a strong bull bar closing with a much better body on on Thursday, and then on Friday we triggered that buy. These bulls are forgiven. A bull who buys above that price bought at 769, and the high of Friday was 774. So these bulls above that bar bought more, lower, and they probably scaled out. That makes the next target, of course, the high above that bull bar, 25.038. What about the bears? Well, the bears have lower lows and lower highs. Lower low, lower high, lower high, lower high. With so many small and weak legs, for a bull, the last lower high, the lowest lower high becomes a target. So that will be that high of June 10. Will they reach it? Or will we have on Monday a chance for these bears to get out break even? A bear who sold this close or sold below that low sees the bull bar on Thursday and thinks, uh-oh, I'm stuck in a bad short. My stop is up there, but if we come back down, I'll have a chance to exit before the stop gets hit. So already here will be bears with limit orders selling out of their shorts, buying out of their shorts before their stop gets hit. The bulls, therefore, will target that stop. And I think it's likely that these bears will get stopped out, will have a chance to reach 24.846. So 24.846, and this is still on the June contract as well. That will be a target. 24.846. 846. Important price, that lower high. Trading range on the daily chart. We broke below that low. We broke above that high. You can also call it a triangle. But I think it's easier to just see it as a horizontal band, roughly between 24,000 and 25,000. Every time we reach 25,000, we fall back to 24,000. We reach 25,000 again, we fall back to 24,000. The low here was 23,983, 17 points below 24,000. That's an obvious magnet on the daily chart. So, will we reach 25,000 again? There is a gap, and the lower high from here, from June 6. I would want to see it. I think we're going to test on Monday or Tuesday the 846, and then come down, and then maybe 2 or 3 bars sideways, and then rally indeed to above 25,000. On the weekly chart, we fell below that low and we closed the gap. That was my minimum expectation for the bears this week. This is a bad entry, and that is a bad bear bar, and that is a bad bear bar. It makes it likely that we'll have to test above last week's high, maybe close the gap, but also it makes it likely that we'll have to fall for another leg down on the weekly chart. We're sideways in a very tight range. I think we can take this line out. We're sideways in a very tight range here between, what is it, 24,600 and 23,600. And the range is tight. The breakouts are failing. We fail to break out above, we fail to break out below, we fail to break out above again, and we're back around a flat moving average. So on the weekly chart, this is a bad buy signal. This was a good buy signal and it failed. This is a bad buy signal. Well, that's probably then going to fail as well. Lower high for the bears there, higher low for the bulls there. Both are targets. The bears want to get below the higher low from the bulls to see if there are any sellers there. The bulls want to get above the lower high from the bears to see if there are any buyers there. This is sideways on the weekly chart, and above last week's high, we probably can rally for the gap and maybe that close, but ultimately sellers will come in and sell above a weak looking buy bar like that. So that concludes the weekly overview. A lot of news related events, but focus on the chart in front of you and trade what's in front of you. Hope to see you again. Of course, we have the Brooks Trading Course EU rooms where we discuss the DAX and indices in the European morning. And we have the US Brooks Trading Room where we mostly look at the S&P and whatever else is trading. End of this month, we have the Macau event. You can see that on my website, where we will be doing 3 days of live trading. I will be there, Al Brooks will be there, Tom Hugard will be there, Rose, Tim Fairweather, and Richard will be there. So hope to see you there, or see you again next week in the EU or the US trading room. Thanks everyone. Hope you have a great rest of the day.